Hi, and welcome to today's episode of the Property Pod. I'm Libby, and today I'm joined by Jo and Andrew from Suffolk Building Society. Welcome to the podcast. Thanks for coming on.
Thank you.
And we're going to speak about the financial elements of getting a transfer of ownership and also getting a mortgage as a sole buyer. So welcome to the podcast, guys. Thanks so much. So tell me a bit about Suffolk Building Society.
So we were actually renamed last year from the Ipswich Building Society, but it's very much going back to our roots because we were founded as the Ipswich and Suffolk way back in 1849.
Oh, wow.
So we've got a really long history. We're still here today offering savings and mortgages. We've got 9 branches in Suffolk. And we find with mortgages, 95% actually comes through mortgage brokers.
Okay. Oh, great. And why might someone need a transfer of ownership?
I'm going to refer to Andrew for this.
Thank you. So transfer of ownership usually sits within either a breakdown of a relationship, so a couple breaking up and transferring it to a sole person, or sometimes you see them when a property is inherited.
Okay, great. And what are the financial pros and cons of a transfer of ownership?
Well, the pros are the house is yours. You are able to get any increase in the value, all becomes yours. You make your own decisions on it. You don't have to talk to somebody else about what colour you want to paint it. Obviously, the cons are if there is a decrease in value, that sits with you. Any mortgage or debts or commitments that come with the property, you have to pay. And obviously, all the bills are yours as well. Obviously, one of the pros then also is if the price of the house increases, the value increases, then you get that as well. Okay.
And what are the tax implications there as well?
Well, that's actually a really good opportunity to talk about going to see a specialist tax expert. I think these are really areas where you want to spend the time talking to a professional.
Yeah, don't rely on Google.
No.
Although it can be useful, not so much when it comes to these really specialist subjects.
Yeah, not for everything, yeah. Okay, great. And how can you transfer property ownership from joint to single?
The actual mechanics of it are relatively simple. A solicitor can fill a form in, they send that through to the land registry, and then the land registry gets changed so the property shows as only one owner. In reality, though, it then comes down to looking at if it's in joint names at the moment and there's a mortgage on the property, is the person in the sole name able to take on that commitment, down to affordability, credit assessments, etc., etc. And that's really the key of it.
And do you have any tips on saving for a house deposit as a sole buyer?
It's really tough when you're a joint buyer, let alone a sole buyer. There's a few simple things that you can do. Andrew has a really good take on this, which is simply to save more than you spend. It's really obvious. There's nothing groundbreaking. We did some research last year, which actually found that 2/3 of wannabe home buyers had a side hustle. So they're actually taking on additional work in addition to their employed or self-employed role to try and build that deposit up. And it went as high as 85% in London.
Wow.
Obviously, house prices are significantly higher.
Okay, so 85% in London have a side hustle.
Yeah, and it can be things like taking on like a bar or restaurant shift.
Okay.
It might be connected to their day job. It's just extra work they take on in evenings and weekends.
That's a really good idea to speed up your trajectory to be able to do that. Yeah. Oh, that's a really good idea.
And I think what's also interesting in these areas is looking at other forms of deposit to come in. So be that parents, grandparents, the bank of mum and dad. We see a lot of that taking place. And also, if it's a relationship breakdown, is one of the parties paying a lump sum to buy themselves out of the commitment? So that can be really, really useful to go down as well.
Definitely, yeah. Every little helps. Yeah, definitely. Okay. And what size deposit do you need as a sole buyer?
There's no set size. It all depends on how much you want to borrow and what the property is worth. During COVID, we did find the mortgage market shrunk in terms of the deals available, and there were certainly fewer higher loan to value deals available, so you did need a bigger deposit. Now we're seeing things are much more normal, so you can get a 95% loan to value deal, so you only need a 5% deposit. But it really comes down to just doing the maths and doing the finances.
Yeah, definitely. Okay. And how much can you borrow as a sole buyer?
So that comes down to affordability. Really, there's two factors when assessing a mortgage application. One, and the main one really, is affordability, but there's also a sort of a sense check, which is called an income multiplier as well. So quite often your lending would be limited to no more than 4.5 times your income, although some lenders, including ourselves, can look up to 5.5 times income. But affordability is the key there that really influences the size, and it's linked to expenditure. So what are you spending? Have you got loans, credit cards?
Okay. Really? So it's linked to your spending as well, your spending habits. Oh, interesting. Because I'm in that situation, so this is all very interesting to me as well. Personally, like for all the things you need to sort of take into account for doing it. I didn't even realise that was a thing.
Well, if you've got a car loan or anything like that, that will feed into it. Again, if you're buying a flat, or there is ground rent or service charge, all of these things really influence the amount of borrowing that you can have.
Oh, interesting. Okay, great. And what are your top tips for getting a mortgage as a sole buyer?
I think really talk to a mortgage broker. You're able to go to a mortgage broker who can look at the market. You can go directly to a lender or to lenders, but ultimately it's about, I think, seeing what options are out there for you. Look as broad as you can and see what's out there.
Yeah, these mortgage brokers know the criteria and products of lenders inside out. It is their day job. So it can be really beneficial for people to seek out a mortgage broker.
Absolutely.
Okay. And do you need to get a completely new mortgage, or just consent from the lender to remove the other person from the current mortgage?
Both of those are options. So basically, the sensible thing will be to look at, again, talking about choice, talking about the options that are available. So by talking to a mortgage broker, you can see whether there's a cheaper product or a more appropriate product out there for you. You would always, I would say, talk to your existing lender as well. They will then assess your affordability. They'll look at you as an individual and see whether or not they feel you're able to take over the loan commitment yourself. And if you are able to, then you're actually in quite a good position, because you've got the choice of staying where you are or looking at something that may be more appropriate out in the wider market.
And how would I apply for a mortgage as a sole buyer?
In the same way you would as if you were a joint
Oh, okay.
buyer.
Oh, right.
It really is a case of talking to the mortgage broker or to the lender or lenders. And then they will either ask you to fill forms in, or it'll be done electronically. Various different ways that you can do it, but it is quite simple, and certainly if you're using mortgage brokers, they take a lot of the work off your hands. They'll do the submission, they'll do the sourcing, they'll find the right home for you. So actually you're doing very little of the actual work on it.
Okay. And just be prepared to submit details of your income, your expenditure, your bank statements, verifying your ID and that sort of thing. So there's quite a lot of paperwork, but you will be helped through the process.
Okay. And what difference does it make if you're self-employed and a sole buyer?
So self-employment is something that's obviously been in the news a little bit over the last 2 years with COVID and the impact on people's businesses, and it's been incredibly difficult for a lot of self-employed customers. I think really it's actually a subject all in itself to talk about self-employment and getting a mortgage. Ultimately, what a lender is looking for is the same, which is how much money can we use within the affordability calculator, but in reality, it's about looking at whether looking at salaries and dividends, looking at share of net profit after tax and adding salary back in as well. Different lenders look at different things. You may also consider whether you've taken any grants or bounce back loans over the last couple of years, and really assessing whether the conduct of the business and the earnings of the business are ongoing. It is something that is a subject all in itself.
Okay, great. Well, thank you so much for coming on today. It's been great to have you on. And for all you guys at home, if you did like this episode, please don't forget to like, share and subscribe, and we'll see you next week.